Right, good morning, everybody. It's another update from me. It's been a couple of weeks. I'm going to talk a bit more today about what we should be doing next. Because the reality is that we have seen probably what I would call a stabilization in terms of what we're seeing from consumer behavior, what they're purchasing, and what they're doing. So, as I talked about a couple of weeks ago, there are a number of sectors that we all understand now that are performing better around skincare. Certain types of retailers are doing with being at home, healthcare, food continues at pace, and the sectors, particularly retail, clothing, travel, are all a bit of an abomination, frankly. And that pattern has remained relatively stable. It is coming back a little bit in terms of people are starting to spend money a bit more on stuff that might be for the future. There has definitely been an increase in intent around activity for next year, particularly when you start looking at sporting tickets and travel behavior. The vast majority of travel behavior is for holidays for next summer, and actually any intent that's being shown at this moment in time is domestic. So will I be able to travel on holiday in the UK? But I actually want to sort of touch on, given the fact that that sort of stabilization is happening, and that actually what you are really seeing is a small decline in the sort of COVID-related areas, but they're still significantly up. A small decrease in the decline of other areas. It's not significant, right? It is a reality of what we're seeing. And I think what we're seeing now with the sort of advice that's coming out from the government about what the new normal for the next few months will look like is an appreciation that the new normal will include a huge amount of social distancing, and that our outdoor lives are unlikely to return in any form to what they were before and be significantly more constricted. Now, with that in mind, and also, to be fair, given the state of a lot of businesses, particularly in, well, actually, if you're not in one of those COVID sectors, the financial implications of this. And I think it was very interesting to note yesterday when all of the big giants reported their revenues. Amazon, yes, were up significantly, but also reported they would have to spend all of the extra money they've made on COVID-related measures to improve their business, and hence would actually still lose even more money than was originally forecast in the first place. So if it's happening to Amazon, it's happening everywhere, and obviously Apple have refused to give any forward guidance. And both Facebook and Google reported softening of their Q1 figures, particularly on March, but also not particularly bullish going forward. So there are four areas that I think that depending on the nature of your business and how you sell to consumers, that you need to be thinking about. And marketing is only really one of those four facets. So if we start at the top, the first is actually distribution. So the biggest challenge that a lot of you will have is significant amounts of your distribution are in the offline world. Now we know that, or not we know, we speculate that actually your ability to go and offline shop in the way that you used to is going to be significantly reduced going forward. For those of you that have direct-to-consumer brands, great, and get decent traffic direct to your websites, brilliant. The areas that you need to focus on really are around digital infrastructure, analytics. There have been lots of changes with SEO, so even if you've done well, you may find the supermarkets have eaten you for breakfast in terms of what that looks like. If your distribution also includes significant amounts of third-party online distribution, like Amazon or eBay or Currys or whatever the sector is, then actually a lot of those guys have become the starting points in terms of consumer journeys, and you need to look at how you optimize your visibility. And it's a visibility exercise, right? You need to ensure that whatever the consumer's route is into your product, that you are trying to maximize what that visibility looks like. That plus looking at conversion rate optimization for your own activities and improving the state of your analytics to make sure that you have better, newer data based on how consumers are behaving now to basically make better decisions. And that will obviously become much more important from your marketing efforts, where, let's be fair, data is the new oil, and actually oil is now valueless, pretty much like how a lot of your old data will be. So unless you have a way of reorganizing that and understanding what meaning is today and leveraging it in real time, you're going to have a challenge. For those of you where actually you do not have strong direct-to-consumer propositions where most of your stuff was offline, you need to look at actually how do I get into those third-party places. Now, the obvious ones are an Amazon or an eBay because they are often quick and easy to set up. But if your product should exist in a John Lewis or in a Curry's, then actually is there a route into, at least from a digital point of view, getting your product into those areas and expanding your online distribution reach if your own direct distribution is very weak. Again, areas like digital shelf optimization in particular will be essential to you to actually make that work and drive a footprint in terms of what you do. So that's my sort of first piece. Is it's reorientating and understanding where you can actually distribute your product and where you can actually leverage traffic that is not necessarily going to cost you cash. It might cost you effort in terms of what it does, and actually for some of the areas where you need support, the relative cost of investment will be relatively low to what the potential uplift happens to be. So that's my first sort of point. My second point is actually around product. The reality is, if you all do your analysis, you will have a lot of product that doesn't make you any money. The chase for revenues has been fairly consistent over the last few years, and what you've seen brands do is extend their product ranges or innovate in new product development to try and get that extra 1 or 2% of incremental revenue. The reality is the financial challenges around cash and cash flow, and also I'll come to where you should be investing your money in the next sort of 6 months. It's not product. It's not extending your product range. It's not holding deeper levels of stock. It is refocusing your product on the areas that are likely to make you money, and also where you can get supply chain efficiencies from the way and volumes that you buy. So it is really a time to focus on product profitability, not actually on range and extension. And obviously, you know, if you do the analysis of what you have in your product portfolio at the moment, you can make some pretty good judgment calls about what not to buy, because it is unlikely to sell in any significant volumes over the next few months. That also gives you an opportunity, right, in terms of understanding, is there room for your brand to play in other product categories that are associated to yours, because it is a logical extension. So obviously, if you do a lot of beauty, you might have the ability to move into, or a lot of makeup, or move into skincare, etc. But what you don't really want to do is start getting outside of your zone, where the levels of investment you're going to need to start investing to build a presence simply aren't worth it for you to kind of do that. So that's really my second point. My third point really is reorientating your cost model, because you need to create more money for marketing. Because the reality is that you are not going to reach people at all in the offline world in any significant volumes. People are not going to walk to your shops. They're not going to buy you and see you in newspapers. The change that we've seen in consumption to digital is going to remain. And with this few exceptions, like the fact that TV is extremely cheap right now, and there's some tactical advantages around some of that stuff. If you still need to connect with consumers, all of the offline efforts that you have will have gone. So actually, it is keeping shops closed that don't actually make any sense to have. It is looking at reducing any expenditure that is unnecessary from a long-term investment point of view, because actually the reality is, for some of that stuff, you are very unlikely to see a return on investment before you have a real challenge in terms of what you look at. And the reason I talk about that is that you really need to be focusing on maximizing the right product in the right distribution channels with the right amount of money to try and drive the incremental revenue, given that a lot of your competition are going to be having a hard time. Which brings me on to my fourth and final point, which is the marketing bit, which is normally the bit I talk about the most. So outside of the infrastructure related areas to do with search engine optimization, digital infrastructure, and those sort of pieces, we come to the bit that you need to pay for. So the reality is, we are already starting to see, as that has flattened out, that the rates in Google and Facebook are starting to go up. You will need to understand how to connect digitally with your customers better, whether that be YouTube, search, social. You will still need to understand how you can develop content in these times, and how there are effective ways of using platforms or external resources to allow you to do that. And you will need to understand how incrementality in your business works really well. So The reality is that for most businesses, the measurement architecture they are using to measure the return on investment doesn't really make a lot of sense. Now, going back to my earlier point about, are you going to really invest at this moment in time with a proper measurement architecture that gives you an understandable return on investment that has a 6 to 12-month payback window? No, you are not. You absolutely are not. So the biggest danger you have is you're massively reliant on tools from Google and Facebook, which mean you invest more money in Google and Facebook alone because you measure within the architecture that Google and Facebook want you to measure in. The fundamental problem with that is you are giving all the measurement and whether it works or not to the person you are giving all the money to. Now, fundamentally, I've never believed that makes any sense at all whatsoever. And in this environment, I would argue no differently. So you need to, if you have agency support or even internally, look at how your data is set to cut and understand your data better. The amount of money I have seen still going into things like search, where you look at the incremental return, it is pointless investment. The averages look fine, but the incrementality is rubbish. In fact, non-existent, because it's negative. These are where the core challenges are. So actually, what you really, really need to understand and avoid is the classic symptom of I will invest all my money in these two places, because relatively, these are the two places that are going to see the most overall inflation in terms of what's happening from a comparative cost structure. Now, don't get me wrong, I'm not saying it's going to be as expensive as it was before, because the markets are different. But what I am saying is actually from a comparative value proposition compared to other alternatives out there, it may not be the most sensible thing to do. And that's because your measurement architecture doesn't allow you to understand that in an effective way. So you need to build better measurement, even if it's channel level, to understand what's happening with those three areas. And then it's then connecting the dots about how you ensure that you leverage your media investment more effectively. Now, I know for most people that won't happen, right? Well, I know what will happen is the classic, I will shove more money into Google, I'll shove more money into Facebook. For those of you that actually figure this out properly, that is where you'll get more efficiency in terms of reaching your audience, more efficiency in terms of what your return on investment is, and more efficiency in terms of what your long-term output looks like. There's just a bit more effort in the beginning to figure out what that needs to do. But the one thing that I think that's quite interesting from an overall point of view is, unlike any other sort of economic crisis that we've had in previous years, your communication options are going to be much more limited. And they're going to be much more digital, and they're going to be much more measurable, and they're going to be much more flexible. And all of those things create an advantage. I did actually miss one thing, which I'll come back to on the product piece, which is we had Suzanne Harlow, the former CEO of Debenhams, do a chat with us a couple of weeks ago. And one of the things she mentioned, which I thought was actually really worth highlighting, going back to that product point, is consumer behavior is also not just going to be different because of health, it's going to be different because of money. And you can already see from the things that are happening now that consumer demand, when you add it up overall, is significantly down. A lot of people are still getting paid. People are going to save more. And the reality, when you have what is likely, in my opinion, to be the sort of recession that is about to come next, is it will have the same skewing effect that we saw in 2008. And that skewing effect actually is, if you have money at the luxury end of the market, you'll probably still do fine, because actually you'll have disposable income, you've got money, you don't actually really care that much in terms of what the overall happens to look like. It might take you a bit longer, you might buy a little bit less, but actually, and to be honest, you're probably not traveling as much as you used to. So therefore, you're not going to see that piece. For everyone else, you're going to have the drive to value. And the truth of the matter, if we talk about it macroeconomically for the last sort of 10 years, is the middle has been squeezed all the way since the financial crash. And predominantly that, if you're a Londoner, that's to do with housing costs. But actually job insecurity, gig economy, all these things have meant that actually, if you really want to look at it historically, the middle, what we would consider the middle classes, is a really shrinking pot. You have a small amount that is attaching onto the top end, but the vast majority are moving towards the bottom end. This will exacerbate that problem. And that will actually mean that when you look at product, you need to understand in which place you're playing. But if you're going to pick product that puts you squarely in the middle and in the middle of pricing, you are likely to have a very, very difficult time, no matter what you do going forwards. those are my thoughts over the last sort of week, really. Given all the things that are changing, if you listen to me next week, I might have changed my mind entirely. But I think it's unlikely. But I think the reality now for us and what we're advising clients to do is it isn't about trying to fix one particular channel. You need to look at these things holistically in terms of what you do. And if you cannot solve some of these challenges, your answer might be to batten down the hatches and try and hold out and wait for it all to go away. The reality is, if you look at what's likely to happen, none of us are going to have the luxury from a cash flow point of view to make that a reality, to do 6, 9, 12 months of that particular type of scenario. So if there are any things that I've talked about that you find interesting and you want to discuss more, please feel free to reach out to us and let us know. And I think that's probably it from it. It's from me today. I am chewing my words really badly today. I hope you will have a lovely weekend. I will speak to you very soon. Thanks. Bye.